Ladies and gentlemen, welcome back to the channel. Markets came under a lot of pressure today, to say the very least. Tesla stock was down about 4%. In today's episode, we're going to be going over my thoughts around this. Best case, worst case, base case scenario for the new China tariff threats. We're also going to take a look at what Wall Street is saying about the China tariff threats. And, well, surprisingly, a lot of Wall Street doesn't sound concerned. Most of what I've seen today are actually hedge funds and institutions saying to buy the dip, that China tariffs, massive China tariffs, are quote unquote unlikely, that it's a very hollow threat. In today's episode, we're going to look at least one clip from CNBC from a China strategist, someone that studies U.S.-China relations, that has more insight than likely you and I do. He's actually the one that says it's a hollow threat by Trump. So we're going to get into all of this information in today's episode, talk about Tesla stock, again, where the stock could go if certain situations did materialize. Okay, so yeah, we have a lot of work to get into in today's episode. Hit that like button as well as subscribe to the channel if you have not done so already, and let's get started. Now, just to save us the time in today's episode, because I would rather not make a 35-minute long video on this, I'm not going to read the exact Truth Social post that Trump made. He basically said that he was shocked that China is doing these export controls on America, on even other countries as well, not just America. And he basically wants China to explain this and to stop doing this, okay? That's the long story short. And Trump said, if not, America has a lot of levers to pull to punish China, including quote-unquote massive tariffs. Now, Trump also said in this like 2,000, 3,000 character post, it was a very long post today, that he acknowledges if America has to basically bazooka China economically, that it's going to cause pain for America, but in the long run, it would be a good thing. Now, if you guys know my stance on this, you know that I think Trump wants a good market. I think Trump knows the economy cannot really handle like another big trade shock, right? I don't think Trump is so full of himself that he thinks he can do whatever he wants and markets are going to be good, economy is going to be good. Like, I think Trump actually knows the situation on the ground and the economy could not handle a trade embargo with China. I'm going to hope that's the case because it would seem to be commonsensical, okay? If I can tell you this, I'm sure the president could tell you this. He has more information, data, and resources than I do, okay? But we're back in this very headline-driven market following today. The knee-jerk reaction in stocks was not a pleasant one, okay? As they say, stocks take the elevator up and the escalator down. This is the biggest red day we've seen since back in April. We have not had a day like today in a long time of just, you know, getting punched across the stomach, okay? This was a real gut punch for a lot of people because it really came out of left field. Nobody was expecting this from Trump. We thought that things were going well. Even in the post that Trump made, Trump said he thought things were going well. He was going to meet China's president in 2 weeks. Trump also said there's no reason to meet China's president in person now that they're having this dispute. This could go really one of two ways. This could get worse, and we could wake up Monday with 100% tariff on China. We're talking trade embargo with China. We're talking higher inflation expectations, weaker growth expectations, and I mean, better than not odds of a recession at that point. As I've said on this channel, the big risk investing in this market right now is, hey, things look like they're going to be good for 2026. I see the consumer, the economy, the housing market getting better. I see this market moving higher. But the fact of the matter is, the labor market is one shock catalyst away from a recession. Now, we don't get shock catalyst all the time. They're pretty rare. Think COVID, think April 2nd, if that would have lasted a while. And now today, if we wake up to some kind of crazy new tariff on China, it would be a shock catalyst, and that would be enough to push us into a recession. Now, does that guarantee a recession? No, but the longer it were to theoretically last, the worse off it would be. Or the highest likely probability, I believe, is China says, okay, guys, we want to get back to trade negotiations. We were not planning on these restrictions causing such a problem. We're going to reevaluate things. Okay, that's the most likely scenario. Now, Wedbush says today, buy the tech sell-off. Quote, this is 1996, not 1999. It says that tech stocks slid Friday after former President Trump threatened higher tariffs on China and hinted at canceling a meeting with President Xi. The drop followed China's move to tighten restrictions on rare earth exports starting December 1st. Wedbush analyst Dan Ives called it, quote, a high-stakes poker game between the U.S. and China, but urged investors not to panic. Despite short-term volatility, he sees this as a buying opportunity for leading tech names. Quote, the bark will likely be worse than the bite, Ives said, maintaining a bullish outlook on semiconductors, software, and big tech. He highlighted NVIDIA, Microsoft, Palantir, the Messi of AI. Meta, Alphabet, and Amazon as key players in the fourth industrial revolution, calling this a 1996 moment, not 1999. Ives expects tech stocks to climb another 7% or more by year-end, citing strong AI-driven demand and ongoing investments from OpenAI in NVIDIA and AMD. He says, quote, buy the winners, don't run for the exits, he concluded. So, again, you're getting this approach, this commentary from most of Wall Street today. Most of Wall Street is saying today, AI trade is intact. This doesn't mean anything until something happens. That a lot of Wall Street is actually saying that they don't think anything is going to happen. Okay? That this is just another scary headline. And again, the bark is worse than the bite. But if we know anything about Trump, is we know nothing about Trump. We know nothing of what Trump is going to do. Trump essentially holds all of the cards right now, and we're just sitting there looking stupid. Okay? Like, we hold 0 cards. Okay? And without any warning at all, Trump could come out with a really bad headline on China, and this would only be the start of a decline. It could get much worse from here. Or Trump could come out and say China has agreed to talk about export controls. We thank China for their cooperation on this matter. And hopefully, China and the U.S. get along. Something like that would quell a lot of fears. I think the reason why you had such a knee-jerk reaction today is you had no follow on to this. It was just Trump that made this statement and then nothing. But you didn't hear anything negative about China relations as well. Like, it just came literally out of left field, and Trump's talking about massive tariffs and pain for the U.S. economy. That was not in anyone's cards for today. In fact, stocks were doing pretty well before today. You actually hit a new all-time high. So if things reverse and go back to normal, then could you see this market return to melting higher? Yes. Again, at the same time, if we do get another trade embargo with China, if Trump comes out on Sunday and says he's throwing 100% tariff on China until they lift export controls and it goes back into this, poker match, if you will, this chess game, you could fall another 20% in markets, right? Depending on how long it lasts, obviously, okay? But even from here, to fall 20% would put the S&P back to 525. Like, substantial downside could come from this, okay? Or we go back to business as usual. I think again, if I were to assign probabilities on this, you're looking at like a 20% chance of Trump going rogue and just saying, F it, we got to do what we got to do. We're going to slap tariffs on China, and we'll deal with whatever economic consequence comes from that. It's maybe a 20% chance of that. There's an 80% chance, in my view, things go back to business as usual. Now, one could actually say, considering this market was kind of just melting straight up, that getting a jolt of fear into stocks could actually be a positive thing, right? Because when people start to get so bullish that they forget there's these downside risks out there, eventually it sets you up for a large decline, right? Like, it's kind of like going to the dentist. You go to the dentist and or take care of your teeth, that can prevent you from needing all your teeth removed and a big expensive bill down the line, okay? Today is like kind of going to the dentist for your 6-month yearly checkup, right? Reset a little bit of expectations, momentum, and then allow things to, kind of go back to how they were before. That could actually be a positive thing over the medium term, over the next couple of months. But that's the risk right now. We don't know what's going to happen. What I'm doing in my portfolio is pretty simple. I'm not hedging at this point because I think the greatest chance is that Trump does not want a recession, that he does not want to go back to, a 20% down market, right? I think Trump sees the reaction today, and that's a call to Trump that, hey, markets still respect what you say, okay? I think that's part of it with Trump. Trump just wants to have his voice heard and wants markets and people to believe what he says. Money is voting today, and money is listening to Trump, okay? But I think the overwhelming odds here is that Trump does not want some kind of economic disaster, okay? I would hope. I could be wrong on that, sure. One thing that I did do today, and I'm more interested in now, is potentially buying some of the rare earth stocks. We've seen those did really well, even as the markets came down, because domestic, rare earths are going to be more and more important, especially with AI, the age of batteries, magnets, blah, blah, blah. If you guys want to see the stocks that I am personally buying today, check that link out down below in the description of this video. It's a way to stay long, but kind of hedge this market at the same time. Now, even if things go back to business as usual, those stocks were doing well. They just did even better today because of the China issues. So I think that's an interesting way to kind of hedge portfolios right now. I personally did not do any hedging today, though. Okay, I personally did not go out and start buying puts, again, because I think the chances are better than not that things go back to business as usual, tensions calm down, okay? But I do think right now that cash is king. Not like selling stocks. Obviously, if you have big gains in stocks you don't really care about, feel free to do what you guys want to do, take profits, blah, blah, blah. What I mean is getting as much cash as possible ready, starting those transfers to your brokerage account, doing extra jobs in person to get as much cash as possible, right? You want to be prepared to buy. As long as you're not in a shit ton of margin, if markets fall 20%, great. You have a better place to buy, right? That's how you're going to make so much money. We made hundreds of thousands of dollars because of the April 2nd crash that we otherwise wouldn't have made, okay? Because we took advantage of the buying opportunity. And if that's the way things go, even if you don't hedge and your portfolio gets killed, you can buy at the lows and amplify that return once we come out of it. So I think cash is king, but kind of alternative hedges could make sense in this market as well. Going long areas that actually benefit from not having relations with China. And strangely enough, those have been some of the hottest areas before today. So it's kind of a win-win in my view. Now, I do want to play this clip for you on CNBC. It says China Moon strategist Jeff Moon says that Trump's threat to impose new China tariffs is a hollow one.
Taken a sharp turn lower as the president did threaten this massive, he called it massive, increase in tariffs on China. Joining us this morning, Jeff Moon, founder of China Moon Strategies, former assistant U.S. trade rep for China Affairs. Jeff, it's good to have you back. Thanks for coming to the line.
Thank you.
Do you think this moment was inevitable?
I think so. I think we need to really step back. This is all part of the bargaining process. Both the U.S. and China, I think, want to somehow get together and reach some kind of an accommodation without resolving all of the trade disputes. From the Chinese perspective, in the meantime, the U.S. has been increasing measures against China, for example, adding companies to the entity list, and there's a lot of rumbling in Congress about additional export controls. And the Chinese, I think, wanted to draw the line and say, stop it. Let's start bargaining here. So what the Chinese have done is pursued several goals. One is, frankly, retaliation. They are mirroring, with their rare earths measures, they are mirroring how the U.S. treats semiconductors. The U.S. foreign direct product rule says that any element of a semiconductor that has American technology enables the U.S. to regulate all of those semiconductors. And the Chinese are doing the same thing with our rare earths. The Chinese are also trying to pursue their usual strategy of divide and conquer, which means that they are trying to get pressure on the U.S. government from semiconductor companies and perhaps from other countries as well to get the U.S. to soften some of the measures that are out there. The Chinese are also trying to pursue their goal of self-sufficiency. I don't buy the argument that we need to sell the Chinese because we'll get them addicted to technology, because they have always said they want to be independent and develop their own technologies. So that's not valid to me. And they want to get the U.S. to relax tech restrictions as well. So there are lots of goals that are going there. The question is, what are the real intentions? I think the Chinese want U.S. chips, despite what they say, and I think Trump wants to go to meet them in Korea, despite what he says. So nothing has happened that is irreversible here. Right. This is all snarling and baring fangs at each other, and I suspect that that things are going to calm down. Trump's threat to impose massive tariffs is a hollow threat, because he exhausted his ability to impose massive tariffs months ago, back in April, and I think the talks will resume and they'll reach some kind of accommodation.
Interesting. So to the degree that some argued the Chinese were trying a rope-a-dope strategy, trying to elongate the discussion cycle, did you ever buy that? And if you did, is that period now over?
I've always bought that. That is always the Chinese strategy, to delay. And maybe we got to the point where the Chinese felt like they couldn't delay because the pressure, like I said, from the entity list and other measures got to be too much. But that's always been the Chinese strategy. The Chinese strategy has always been to give the Americans just enough to feel like it's worth continuing to discuss, but not to shut down completely so that there's nothing to talk about and massive sanctions come. But now the Chinese are saying that, if the U.S. wants to press ahead with these sanctions, well, you know what? We've got some very serious leverage on rare earths, on soybeans, on other things that the U.S. needs, and we're ready to apply it. And I suspect that's been said behind closed doors in Geneva and London and other places between diplomats, and now the Chinese have finally decided to go public with it. And the really interesting thing is that China, because of the leverage that it has, is the only country that can behave this way with Trump and not suffer what it perceives to be, disastrous consequences.
Right. They have, 90% of the rare earths market. So when you say that, China can pursue living independent of the U.S., it's not quite the same for the U.S., right? They need access to that market for rare earths.
Well, another interesting difference is that rare earths is an immediate need for the United States. Chip technology is a prospective need for the Chinese. If rare earths are cut off, there are many things that just don't happen, many products that don't exist anymore. But chip technology is something for China's future, artificial intelligence and other kinds of things. So you could argue, actually, that the Chinese have actually more leverage.
Jeff, we appreciate it. I have a feeling we're going to talk again soon, hopefully with your help. Jeff Moon helping us understand this China news today. Thanks.
Comes to Tesla stock specifically, here's the deal. If things go back to normal, there's a lot of upcoming catalysts for Tesla to do very well. Shareholder meeting on November 6th, Elon's compensation package that I would imagine is going to pass, the OpenAI, let me correct that, XAI investment that Tesla is going to make. I think we're going to get news on maybe unsupervised robotaxi rides here soon. We've seen work being done on the Cybercab and testing being done. If not, I do think we're going to get at least one, if not three more cities being announced. Robotaxi operations are entering by the end of this year. I think generally without this trade fear, the economy should get better into year end, into next year. No tax on tips, no tax on overtime, big beautiful bill. All of those positive things for the consumer start to really come after taxes are filed next year. People get that money on their tax return. Okay. There's a lot of tax changes that are very stimulative. Okay. AI is alive and well. No issues there. Real estate can start to move. People can take record amounts of equity to their bank accounts once they sell their home. Like, there is a lot of positive things happening out there organically, as long as we don't have some kind of big trade shock. Okay. So we're going to go right back to a strong ass market year-end rally. If this dies down and settles down, Tesla's going to go into the 500s by the end of this year, in my view. Now, if things get worse, here's the problem. Tesla's fallen back into the 300s. I mean, if we get a 20% decline on markets, I would expect at least a 20% decline on Tesla from current levels. That puts you back to about $331 per share or so. That's not terrible. I mean, that's basically back to where you were in August. So it's tough. It's a tough situation. Tesla only being down about 4% today, though, does seem positive. It could have been much worse. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.